Welcome to the Korea Society and welcome to Studio Korea. I'm Stephen Noerper, the Senior Vice President, and we're delighted to have you with us today for our next installment in a series that recognizes those who have contributed fundamentally to the Korea-U.S. relationship, in this case to the business and investment relationship. We're delighted to have Nicholas Bratt with us today. He's a member of the board here and also with Lazard Asset Management, and he is someone who has made a significant contribution over many decades, and a person who took risks very early on, saw opportunities, and created some further opportunities as a result of that. So Nick, welcome. We're delighted to have you with us in this session. Part of the nature of the session that focuses on those who have contributed, what we call our Legacy series, is really to listen less to us, the question, and really more to those who have made that contribution and let them tell their tale. And so, Nick, I guess first and foremost, what really drew you to Korea and the Korean Peninsula? And at that time, perhaps a place that was a little less known.
Well, thanks for the question. Before I answer it, I just want to thank you all for coming this evening. The answer to your question, Stephen, is that during the 1970s, I'm already feeling like a lady. I was working at a wonderful company called Scudder, and I was involved with trying to identify attractive Japanese investments. And one of the questions that you always ask as an analyst when talking to companies is, tell me about your competition. Tell me about companies you're concerned about and what steps are you taking to protect yourself. And it was fascinating because in the 70s, Japanese companies, whether it was Hitachi or Toshiba or Matsushita or Sony, they dismissed Zenith. You probably never even heard of Zenith. Zenith was an American company that made black and white televisions.
Which I grew up with.
And that's right. And they said, well, longer term, we're worried about a company called Samsung and a company called Lucky. And I said, I've never heard of these companies. Where are they? And they said, oh, they're Korean companies. And that was the first clue. And at Scudder, we always believed in doing fundamental research. And I thought, well, this is intriguing. If these very successful companies are all, and it was without exception, they all referred to Samsung and Lucky, I thought to myself, I better go and see Samsung and Lucky myself. And so, believe it or not, in the mid-70s, I went to Korea and made inquiries and discovered that, yes, there was a stock market. There were stockbrokers. I'm not exaggerating when I say that the original stock market was a very basic place and there were sort of animals around, farm animals around outside it. And the first thing that was made very clear to me was that foreigners were not allowed to invest in Korea. And I thought, well, gee, that's too bad. But nevertheless, I'm fundamentally an optimist. And I thought, well, let's at least start with the research and let me go and see Samsung and Lucky. And so I made arrangements to go and see these companies. And as a financial analyst, I could not believe what I saw. And the management was very friendly, was very open. I was probably the first foreign analyst they'd ever seen. And they invited me to go and look at their factories. And on a very preliminary basis, I worked out that these companies were not selling at 2 times earnings or 4 times earnings. They were selling at less than 1 times earnings. And they were growing at 20, 30, 50, 100%. And I thought, this is the most attractive investment opportunity anywhere in the world. What can I do about it? And so that was the beginning. That was the first insight. It was entirely as a result of listening to Japanese companies talk about future competition and deciding that I needed to understand what that future competition was.
Fascinating. And so you walk into a Samsung factory, and now everyone here, thinks of Samsung as a great global brand and the new G4 and the Olympic sponsor. But what did Samsung look like to you as you walked through that door?
It looked like, I mean, there was a production line, but it was a pretty basic production line compared to what the Japanese already had in the mid-70s. But I looked at the products they were making, and the products worked. Yes, it was fairly labor intensive, quite different from consumer electronics production lines now. But I could see that these products, for a certain price in the market, would probably be very successful.
And the labor force was...
They all looked about 12 years old. They weren't, of course, but and there were a lot of women on the production line. They worked long hours. And they were paid a pittance. In those days, I happened to check before coming this evening. GDP per capita was close to around about $10,000. And then I started having spotted the investment opportunity and knowing absolutely nothing about Korea, nothing about its very challenging history, nothing about its culture. I started doing my homework and became fascinated with how this country has survived in a very difficult neighborhood with two very large neighbors, and how they had retained their cultural identity. So then that sort of intrigued me in terms of something about the national character. So I began developing some enthusiasm about the investment opportunity. At the time at Scudder, we'd acquired the management company to the Japan Fund, which was a very famous fund. It was the first fund that was ever launched in this country to enable Americans to invest in Japan. And so that was an obvious model. So I came back to the office, and we used to have a wonderful chief executive in those days. His name was George Johnston. And he was a real pioneer, and he was very open-minded. Scudder was a private company, it was a partnership. It always prided itself on introducing new products. And so I walked into his office, and I said to him, I've just stumbled onto what I think is the most attractive investment opportunity in the world. And he said, what are you talking about? So I described to him my recent research experience. It turned out that he knew a great deal about Korea because he'd fought in the Korean War. And so, again, it was a stroke of luck. I landed on a sympathetic ear.
Interesting.
And I said, look, we're managing the Japan Fund. Why don't we create a Korea fund? And he said, terrific idea. Let's go for it. Should I keep going?
Oh, yeah, sure. No, absolutely. That was actually
because I forgot
my next question for you.
I forgot what the question was.
No, but then that's about 1979 that you put that fund idea forward. But it did take a few years.
Yes, absolutely. You're well informed. So the first thing he said to me, well, Nick, bone up on Korea. You know nothing about the place other than your short visit. And I said, yes, that's correct. I said, let me do some research. Let me develop the investment case, and then we'll give it a rethink, and we'll see whether it really does make sense. And so I collected economic information. It wasn't that easy to get the statistics, but the World Bank at the time was involved in Korea. I discovered later on that in many ways the World Bank regarded Korea as one of their best students, one of their greatest success stories. And it's correct when you realize what a terrible state Korea was in after the Korean War. And so the investment case became more and more compelling as far as I was concerned. And George Johnston, I convinced him. It didn't take much to convince him. I think he saw the opportunity as well. And so in 1979, we delivered to the Korean authorities, the MOF, a proposal, which was to launch a Korea fund. And to cut a long story short, it took us 5 years, from 1979 to 1984, to convince the Korean authorities that it made sense to create a fund to enable foreigners to invest for the first time. Up to that point, Korea was a closed market. The Hermit Kingdom applied also to the stock market.
And was that was rigidity in dealing with those investments? That was all of the great flux in the political system at that time, a combination of factors?
The reason why it was closed?
Yes, why it was so closed and why they were so resistant for half a decade.
I think it had to do, well, those of you who are Koreans obviously know much more about Korean history and culture than I do, but I think it had to do with a streak of xenophobia, a fear of foreigners. Obviously, the history would explain why. And I think there was an understandable concern that if foreigners were allowed to invest in Korea, they would end up identifying all the most attractive companies and would want to take control of them. And the Koreans were naturally proud of what they were achieving, and they didn't want their best companies to fall into the hands of foreigners. We understood that. I understood that. And so the case we made to the Korean government was, look, we can create a fund, and we explained, and I will explain to those of you now who are not familiar with what a closed-end fund is, but we will create a fund which will be subject to an investment license, which you will issue to us. We'll work with you to create this license so that you are comfortable with the rules and regulations and limitations that the license will impose on us. For instance, we will agree, I wanted to whet their appetite right at the outset, we will agree never to purchase more than 4.9% of the outstanding shares of any company. So don't worry, we're not going to take control of any Korean company. Yes, we want to identify the most attractive ones, but we will limit our ownership. And you could almost see a sense of relief, because this dealt with one of their major concerns. And so once we reassured them that we were not interested in control, we were simply interested in generating a high return for investors, they became more interested.
Interesting. Then over the course of the next, say, decade and a half, the late 80s, the 90s, leading up to the financial crisis, which had its own sort of shock effect in terms of not only the economy, but in terms of issues of trust and sort of xenophobia and ownership.
Yes.
How did, I guess, you see that evolution then?
Yes.
And then the blossoming that has really been this last decade and a half.
Yes. Well, as with all these things, it takes time. And when one's living through it, one actually doesn't realize how much time is passing, particularly when you're having as much fun as we did. Because it really was fantastic. I mean, it was such a treat for a professional investor like myself to have the opportunity to, frankly, not have to compete with anybody else in terms of identifying the companies and paying what were, I mean, I knew it at the time, paying extraordinarily low prices for some really fantastic companies. And so in the early days after the fund was launched, everybody was obviously very curious to know what we were going to buy. The brokers were trying to front run me, were trying to anticipate what I was going to buy. And then as soon as we started buying something, all of a sudden, it would be very clear to me if brokers had broken our trust, because I'd made it very clear that as we started buying shares, that under no circumstances were they to tell anybody else that we were doing that.
Mm-hmm.
And you have to understand it was a very primitive financial market in those days. And unfortunately, some brokers misbehaved. And as soon as that happened, we cut them off immediately. And we made it known to everybody else that this broker had been eliminated from being a service provider to us because they had not honored our request for discretion. And brokers are particularly hungry businessmen. And if they suddenly realize that actually they misbehave, they're going to be cut off from the honeypot, all of a sudden they come into line. But I had to deal with some very basic stuff like that at the beginning. But we also knew, and it was healthy and it was important, that as the authorities gained confidence in the behavior of foreign investors, i.e. us, that as part of their longer-term development, they needed to liberalize the stock market. So the next thing that happened was they allowed 2 more Korea funds to be created. One was called the Euro Korea Fund, which was obviously launched in Europe, although ours, the Korea Fund itself, was distributed worldwide. But there was a Euro Korea Fund that was created and then an Asia Korea Fund. So that was the next phase in the opening of the Korean market. The Korea Fund that we created was launched in 1984. Those other funds were launched in, I think it was 86 and 87. Then the next thing that happened was that Korean companies started launching convertible bonds in the Eurodollar market. And they were able to raise capital at very attractive rates. In the background, and I got to know the individuals there, the World Bank was advising the Korean authorities on the importance of liberalizing their market. And I knew, and in fact, I encouraged the authorities to open up the market, even though that it was in a narrow sense against our interest. But to me, it was clearly going to be in our interest and everybody else's interest if you can encourage and allow more foreign capital into the market. So as the market grew in size, it was gradually opened up and the restrictions were lifted. And just to put this in perspective for you, and this might surprise you, but when we launched the fund in 1984, you could have bought the whole of quoted Korea for $5 billion.
Wow.
And just to put that in a historical context for you, as of yesterday, the market capitalization of the Korean stock market was $1.1 trillion. Not such a long time in history when you think about it. It's absolutely fantastic. So what happened, therefore, between 1984 and coming up right up to the Asian crisis, the market gradually became larger, the restrictions were lifted, more and more foreigners got involved, and the stock market valuation, interestingly, still in many ways sells at a discount to other emerging markets. Nevertheless, the stock market valuation started rising to, quote, more reasonable levels. But it was also reflecting the extraordinary underlying growth of the economy. And in the 80s, one forgets this, but in the 80s, the economy was growing between 8 and 12% per annum. So huge wealth was being created. And then when we went into the 90s, the rate of growth slowed to the sort of more like 6 to 8%. But still a very, very vibrant investment environment. And the stock market simply reflected the growth in the economy and the growth, more importantly, in the growth of particular companies. And as we know, I mean, some of the world's most successful multinational companies now are Korean companies. I would suggest that Apple's most serious competitor on the global stage is Samsung. And we all know what Nokia did to Motorola and what Apple did to Nokia.
Mm-hmm.
And so an interesting question is Samsung going to do to Apple what they did to Nokia? I don't know.
Yeah.
But you have to ask yourself the question.
Mm-hmm. Mm-hmm.
So again, a long answer to your question, but I think one has to see this period, these last, what do you think, these last 30 years, I think, 29, 30 years, as a period. In many ways, I would suggest it's a model of how an emerging market should develop its financial sector.
Mm.
And it did it very successfully and created enormous wealth,
Mm-hmm.
and created enormous numbers of jobs for lots of people,
Mm-hmm.
and raised the living standards of Koreans much faster, I think, than anybody would have dreamt of
Mm-hmm.
in the 1970s.
Mm-hmm. No, truly impressive. And I guess then that begs the last question for me before we turn to our studio audience, and that is, how do you look at it now? Well,
Yes.
growth rates are 2 to 2.5%.
Yes.
Does that mean less opportunity, or how do you see it?
Yeah. It's a very different environment now. It's a much tougher one. Much tougher because Korea itself has, I think, joined the ranks of the developed world, even though for peculiar reasons it's still considered an emerging country or developing country. You only have to visit the country, you only have to look at the quality of the companies and so forth to recognize that it has all the trappings of a developed country.
Mm-hmm.
But that includes, obviously, much higher GDP per capita, much higher salary levels, and therefore much higher costs for the companies. And so Korea, to continue to grow and to succeed, has got to keep moving up the value-added ladder. It's obviously no longer a low-cost manufacturing base. And so what does that mean? Well, what it means is that those companies that will succeed in the future in Korea are those companies that are high-tech, those companies that spend a lot of money on R&D, so that they can compete with the best in the world. Korea is also in an interesting location because obviously it's on the doorstep of China, which is the largest market in the world going forward. And it's also next to Japan, which itself, I think, is going through a renaissance of a kind. And so the environment, the local community, the local neighborhood, on the one hand, particularly in the case of Korea, provides a huge opportunity in terms of the size of the market, but also presents huge competitive challenges. And the Chinese are developing companies that will compete with the Samsungs of this world, and also with the Daewoo's and the Kias and the Hyundais of this world. So it's tougher in terms of the level of competition, and also the rate of growth has slowed significantly, not surprisingly. It's much harder to grow once you've reached a certain level. Mm-hmm. The demographics are no longer that attractive. The movement from the countryside to the urban centers has taken place. Mm-hmm. So, one can expect, growth of somewhere between 3 to 5% looking into the future. So the investment opportunities are there, but they are not as glaringly obvious as they were 30 years ago.
We were trying to think of a way to say thank you to you because you're a very consistent supporter here of the Korea Society. And so things like our books and the rest are probably something you're more than familiar with. However, I thought I'd marry two dynamics. One is we know that you are an avid and expert fly fisherman. I say that as an amateur fly fisherman. And secondly, our team here at the Korea Society is building a very dynamic spring calendar now on organizing a tremendous number of interesting events, which you can see very soon at koreasociety.org. If you're not a member, we'd love to have you. And one of those programs will be on the Olympics, the launch after Sochi to 2018 and the Pyeongchang Games. And that led us to go back into our little history. One of the things we found out about before the Seoul Olympics, back to the Tokyo, is that there was a spurt after the first Asian Olympics of private sector interest in Olympic-themed products, one of which is an Olympic fly reel. Wow. And so we have for you a vintage 60s or early 70s Olympic fly reel that we'd like to present to you, and thank you very much for your time tonight. I'm sure you have much finer fly reels, but it's something nice for the desk. Thank you all for coming. And thank
you very much for coming, and thank you.
Thank you.